Well, guys, holy crap, this should not be happening. This is very concerning, and that's what we're going to talk about here in this video. What is happening today, and why is this such a big problem? Stay tuned. Hopefully this video helps you guys make some money. If it does, if you enjoy the video, hit that like button and subscribe to the channel. Thank you guys for doing that, and let's dive straight into it. So the S&P 500 is up 1.30% for the day. The NASDAQ is up over 2%. So what is happening? Well, why are markets actually going up so much today? Well, it's because of this. So you see jobless claims edge up to the highest level since January. Planned layoffs soar. Trade deficit hits a 2022 low. So we're going to go through these individual things and why they are good and bad for the economy and good and bad for the markets, right? So the key points: initial filings for unemployment benefits totaled 235,000 for the week ended July 2nd, a gain of 4,000 from the previous period. Now this is a bit of that bad news is good news, right? If you see unemployment filings going up 4,000 from the last week, well, the markets look at that and say, hey, maybe the economy will deteriorate enough where the Fed will not raise rates as aggressively as they expect to. And obviously the planned layoffs, that's along the same lines. And you can see right here, another report indicated that companies announced 32,517 layoffs in June, a 57% jump from a month ago and the highest total since February 2021. So, you know, people are pretty excited about that. They're saying, hey, the labor market might start to cool down and the Fed won't be able to raise rates as aggressively. Now, this says the U.S. imbalance for goods and services declined 85.5 billion from 86.7 billion in April. So this is good potentially for the GDP report. Now, this is going to get a little bit complex on you guys, and I'm going to try to keep it as simple as possible. So the markets right now, they go from freaking out about a recession to freaking out about inflation. Well, when the trade deficit actually gets better, when it declines, when we're seeing a not so bad trade deficit, well, that means the odds of a recession are going to go down at least a little bit, right? So the markets might you know, not freak out as much about that. Well, when the markets are, you know, not freaking out about potentially the lessening chance of a recession, but they're also not freaking out about inflation or the Fed raising rates, well, that's where you have a big problem. Because if you look at the bond market even today, the 10-year treasury is up almost 10 basis points, 9.5 basis points. That is almost half of a 0.25% rate hike. And usually when you see the 10-year treasury going up like this on a day, then you usually see stocks falling, right? That's the correlation that we have seen. But what we have noticed in the bond markets over the past couple of weeks now, well, bond yields have went down and still down about 50 basis points, about a double rate hike, right, over the last couple of weeks. When the Fed is saying that they're going to raise rates 75 basis points at the next meeting, that's what we have from Fed Wallard and Fed Bullard today. They said they want to front load rate hikes. They want to hit us with a 75 basis point rate hike at this July meeting, probably another 50 basis point rate hike by September. That would put the federal funds rate in between about 3 and 3.25%. So why the hell are 10-year treasuries at 3%? That's a big problem. So either what is going to happen is the odds of a recession will come down, but that means the U.S. 10-year treasury has to go up because the Fed is continuing to raise rates. Either way it goes at this point, unless we actually do go into recession July 28th when we get the advanced estimates for Q2 GDP. And even regardless of that, I don't think the Fed's going to stop raising rates. So you could boil it down to the 10-year treasury has to come back up in a very big way. And what is that going to do for the stock market? Well, that is going to push stocks down. And the fact that you are not seeing stocks actually going down when the 10-year treasuries are going up, it's going to come down to a day or a week period or a 2-week period where the treasuries rally really hard and the stock market is going to fall probably more than what we expect. If the 10-year Treasury went through another parabolic rally, another 50 basis point rally to the upside, that would be very appropriate given what the Fed is doing and how aggressive they are raising rates, and it would probably push the stock market down a good 10% like we've seen last time. But the bond yields falling like this is really just highlighting the concerns about a recession and the concern, or the hope, I should say, that the Fed will not raise rates as aggressively, that they will back off. But we are seeing no indications of that. So either the Fed is wrong and they are bluffing, or the markets are wrong. And I think the markets are wrong. Until unemployment goes up in a big way, or until inflation comes down in a big way, the Fed will not stop raising rates. It doesn't matter what Q2 GDP is. So the markets, they've got the wrong impression here. And it will take some time to play out. I do think the end of July, really throughout the month of August, is when we could see the bottom for the stock market. The bottom will ultimately come when something breaks, when the Fed slows down, or when the stock market just gets pummeled through the floor because the 10-year Treasury just rallied like crazy, right? One of those things will happen, and I do think it is end of July. As you guys do know, we get the Fed rate hike on July 27th, then we get advanced estimates for Q2 GDP the 28th. The whole time throughout that period, we will get large company earnings, and that's where you get into this weird situation where Fed is raising rates, potentially sending us into a recession, and also when Apple's, Microsoft's, Google's, Amazon's start to miss on their earnings, start to come in, well under analysts' expectations, well, then the price discovery action starts to play a role, where pretty much, what is the worst case scenario of a recession? What is the worst case scenario for Apple, Microsoft, Tesla earnings during a recession? That's what the markets are going to try to price in, and that's where you could see really low valuations in a lot of stocks for at least, a month to 3 month period. Until we know where to value stocks, that's going to be the big question, and that's when you're going to see potentially a lot more downside end of July, throughout the month of August. And you can actually see that the probability for a 75 basis point rate hike is now at 94.5% because of Fed Willard and Fed Bullard. Yesterday, the probability was 83.8%. So you're definitely seeing that going back up today. And the markets, like I said, they are not reacting at all. Now, why I think the markets have actually been going up by and large over the last couple of days when they really should not have been going up is because we did hit the lows, we are coming off of the lows, and we're sitting at about 388.42 currently on the S&P 500, and what you have seen is a boatload of call options coming in, expiring really for Friday, right? You see a lot of these expirations that just say tomorrow. A lot of options are expiring tomorrow, and a lot of these calls. So I do think you're seeing just a really big gamma squeeze on the markets and a lot of portfolio rebalancing. If you look at the last week, we have seen 88% positive order value. That is not something that we are typically seeing in 2022 for the S&P 500. About 14,000 orders totaling $2.36 billion, positive order value of 88%. So what these hedge funds like to do, they like to play the upside, they like to try to get out at the peak, and then they like to short it back down to the downside. And you guys can see all of these call options that are coming through. Quite incredible, right? Just in real time, you can see all these options that are coming through, and it's 14:02 right now. I believe that's military time, and you guys can just see it doesn't stop. By and large, like 90% of these options are calls. And for the day, 91% positive order value, 3,200 orders totaling almost $700 million. So when you're seeing this kind of bullish option activity, it's very hard for the stock market to act rationally. It's very hard for the stock market to react to the bond markets or to look ahead and see, hey, it's not looking so good for the end of July. So I do think we're in this weird time period where the markets can kind of react just off of a gamma squeeze, off of hedge funds bidding the markets up. Now, what you still see for that expiration of July 29th, I think that's the most interesting one I want to pay attention to. For the total amount of options that are currently held for July 29th, 2022 on the S&P 500, 23.6% of those options are calls. 76.4% of those options are puts. So it's not moving around all too much, and you're definitely seeing a lot of negative option activity. So there you have it right there. I think you're just seeing a big gamma squeeze on the markets due to a lot of that portfolio rebalancing as well. Now, I do want to call something out that will be the most bullish catalyst for the markets all around, for the recession, for inflation, for the Fed. The number one most bullish catalyst is going to be potentially the war in Ukraine ending. Now, why is that? Because that would massively take down the price of oil, right? That would reduce global conflicts. Both of those things would be bullish. Global conflicts, obviously, due to the odds of World War III, that's obviously got to be somewhat priced into the market still. Then also bringing down inflation. What will that do? It will basically say to the Fed that you don't have to raise rates as aggressively because inflation will come down. The price of oil is coming down. So what the Fed will then be able to do is say, hey, markets, we have tightened a lot, and it looks like the inflation will start to come down a little bit. So we're still probably going to hit you with a 75 basis point. We might even hit you with a 50 basis point at the September meeting, but then we will stop or slow down raising rates. Or potentially, if this war ended sooner, we might only get a 75 basis point rate hike. Then the Fed might say, hey, we'll just raise by 25 basis points until we get up to that 3.5%, 4% level, and then we're going to stop. That would be very bullish for the markets because the markets are forward looking. So they would have an end date to these rate hikes to expect. That's not to say the bond yields wouldn't need to go up at least a little bit more, and then we'll see how the markets react to that. But that would basically be a green light for the Fed to not raise rates as aggressively, and that would also, with that being said, Fed not raising rates as aggressively would mean for potentially a soft landing. That's the most soft-ish landing you are going to get is if the war in Ukraine ends. If it does not, which it does not show signs of it ending, there are some experts saying that there might be a ceasefire announced once Russia takes the whole Donbass. I believe they're close to that. If that happens, it's going to be very good. If that does not happen, well, you're still swimming up shit's creek. So that is pretty much it for this video. That's what you guys need to know. As far as economic data coming out tomorrow, you do have the non-farm payrolls for June and the unemployment rate for June. Again, going to be very, very important because if the unemployment rate just continues to go down, which it's been pretty flat over the last couple of months, well, that's going to be a bad thing for the markets, right? That's going to say the Fed has a lot more room to raise rates, and that's the most important thing that you definitely want to pay attention to heading into tomorrow. Fed Williams, that does speak at 11 a.m. as well. So thank you guys for watching. Hit that like button and subscribe to the channel. Make sure to comment down below any questions you have, build on this thesis, whether you think the markets are gonna be bearish, bullish, whatever you guys think. Let me know your thoughts down below in the comment section. If you guys want to get free stocks, down below in the description is the way to do that with Webull, Moomoo, and Public. Right now, if you sign up and deposit just $1 or not even deposit, you will get 2 free stocks without a deposit, just signing up, getting your account approved. And then if you deposit $100, you will get 4 more free stocks on top of that. So thank you guys for doing that, supporting the channel each and every single day. Love and appreciate every single one of you guys. You guys enjoy the rest of your day, and I will see you in the next one.